All right, hope everyone's doing well today. This is our weekly recap. Today we're going to talk about oil, the dollar, Bitcoin, real estate, and what is happening in each of them, where things are going. So, without further ado, let's take a look at oil. All right, here's a chart of oil. As we've seen, it's been in actually this kind of like this pattern real quick where it goes up, pops down, goes up, pops down, goes up, just kind of goes. Now, it has not broken $64, $65, what is it, 65 for a while type thing. You see some little pops here, but then it just pops back up here, then it broke it and it just kept going up type thing. It's come close here and then it's just kind of doing this. So there is a few things that can happen, right? It does have lower highs currently, right? And I wouldn't say lower lows. It's got about the same. There is a good chance that it's going to break this floor, so it kind of sets up like a triangle. And the think of it like a ball bouncing. It goes up, it goes down, hits the floor, goes up a little higher, or goes up but not as high, hits the floor again, goes up high but not as high, hits the floor again, and then poof, falls through, right? Now, for this, there's two things that can happen, right? This is kind of, you see this wedge right here, you see it right here, and if we take it and we draw it through, there's a lot of people saying that oil could fall to about $58, give or take, before it goes up. I can see that through this chart. Also, this could look kind of like, not exactly, it looks like a very real rough reverse cup and handle, right? Where if you measure from here, we'll say this is that kind of the middle of it, if you will. Push this right here, take it and pull it down. It comes down to about the same price, give or take 50, 57, $58, right? Oil could fall there. Now, this whole downward trend is in a sense bullish, right? Because you only go down so far before you come back up, right? Oil has very high slingshot things, as we see through this side of the graph. It starts to slingshot up and everything. So for oil, we could see some lower lows before we see some really big highs. Now that's what the charts tell us. If you're on the ground floor, the energy markets are tight. There is a little bit less. There's less demand from around the world because basically the rest of the world is in a recession except for America, right? So you couple that with maybe the new president coming in for drill baby drill type thing. It will probably have a shock downwards. Okay, now after that first initial shock, we're gonna wake up and realize, hey, what's going on? There's not a lot of drilling going on, etc. Right? Or there's not enough to go around. And after that shock, I don't know how long it'll last, but it'll probably fly up. Who knows? We'll have to check the charts then, type thing. But this is a probability. Again, it's only like, it's a 70-30, 60-40, 80-20, however you want to put it. I would just say 70-30. That is the probability of it. Okay, so oil might go down before it comes back up. Is a good probability. Now let's go to natural gas. Oh, also I will say, oil for the longest time has been in it's kind of like a bear, excuse me, a bit of a bear market. So here's the 200-day moving average, that white line right there, and the yellow line. If the yellow line is above it, excuse me, if the red line is above it, that means it's in a bull market. If it's below, it's in a bear market, right? So it's been in it for the last like 6 months type thing. May go down lower, but eventually it's going to pop up. Who knows when type thing. I mean, there's so many things that can happen. This is not kind of geopolitical stuff, right? Like if there's rumors about the U.S. creating a plan to have war with 7 countries, and they've already done 6 in the Middle East. We're done 6 of them, and Iran is the only one that's not on the list. Iran produces 10% of the world's oil, give or take. And man, if we go to a fight with them, it's not gonna go down. Let's just put it that way. So there's a lot of things that can happen. And that caused a little bit of a fuzz in the air type thing, geopolitical things, tensions and such. But if absent of those, if it just kind of goes through it, it's probably going to pop down before it pops up, right? Natural gas. Natural gas is in a bull market, right? You see the red and yellow line above the 200-day moving average right here. So it's kind of, again, it was in a very big bull market on this side of it. Fell down once the current administration in the U.S. said, "Hey, no more exporting LNG." I expect the new administration to rip that Band-Aid off pretty quickly, and so it's probably going to hover around here somewhere, but it's already ticking up just because of the winter season. People use more gas excuse me, to heat their homes in the winter season. And so it has gone up. If you bought it here or something like that, it's gone up almost at least 50%, maybe almost 100%, right? Good trade. But I do expect natural gas to stay up here for quite some time for the winter. We'll see what happens when the next president gets in. But it looks like it's going to form a good channel here. It'll have its pullbacks, but these are higher highs and higher lows, so that means good upward movement, right? All right, the DXY. Here's another reason why oil is being pushed down, right? Because we look at this chart and we say, oh, it's kind of being staggered and pushed down and such like that. And I will say this real quick. So every time I see oil hit about like in the 60s or something, it pops back up to 70. Okay, this is just going to form this channel until it pops. Who knows? And it's going to pop one way or the other. I would say there is a likelihood for it to pop down to 58, but and that some people might sell their shorts then on it, and it'll pop it back up. It's going to be a wild ride for a bit, right? But I will say one thing's putting pressure on oil and on pretty much everything else is the value of the dollar, the DXY, right? Or the Dixie as we call it. So in the last, if we zoom out here, it's had this huge mammoth of a swing. And that was when it's at its most valuable time. It was in October 2022. I think that is due to when all the free money from the government went away, right? I'm not really completely sure. I know in 2020, it had a very strong value, especially when the crash happened, right? And then it goes down because everybody's giving away free money, and about, I guess, yeah, a year and a half later, it stopped, and so people are needing dollars. The thing you want to know about this graph is when it's high like this is when people need dollars, right? This is when people don't have cash, they need cash, right? When it is low like this, people are flush with cash, okay? We can also see kind of interest rates down here and then interest rates going up. That might have created it. Who knows? But this is also not just the U.S. This is foreign countries as well. If you hear like, hey, China or Japan or whatever selling their treasuries, and BRICS is going to be the next one, and the dollar is going down the drain. Well, this chart says no, it's not. And the reason why they're selling their treasury bonds is because treasuries are delayed dollars, right? I put $100,000 into treasury bonds today. I get 100,000 plus, whatever percentage back in a certain amount of years. So they're delayed dollars. But what happens if I have to pay a $100,000 bill today? Well, I'm going to sell my $100,000 treasury bond, right? Because that gives me the cash to pay the bill. That's what is happening with people overseas. They're needing dollars because their contracts, their agreements were made in dollars, and the value of their currency is going down, right? And the value of the dollar is going up, so they need more dollars. So they're selling off their treasury bonds, right? Their assets that are dollar-backed and dollar-based. We actually had a pretty large rip here. At first I thought it was the election, but no, this happened like end of September, so way before the election, right? Unless these charts can tell who was going to win type thing, which they can at times. But hey, we've had this huge pull-up type thing. This is almost like, this might be like a really ugly cup and handle, right? It kind of comes up here, forms a really ugly kind of curve, and then this ugly handle. And then if that's true, this thing is going to skyrocket. It's going to come... let's see here. The difference is 100. Well, let's see. The difference is 103 to about 91, so about 14 points. So from 107 to, doing math right, 21, it's going to come up here. If it rips, Or I should say, I guess from the middle, so 104 times that's 20. Yeah, that's about here, give or take. And that is, if we hit that, we'll probably hit a major recession, or it'll be telling of a major recession. So the dollar's putting pressure on things. Let's go to Bitcoin. That had a huge explosion. If you haven't heard about it yet, but here's a great cup and handle setup. Here's the cup. Here's the handle right here, and when it breaks, it pops. You take this from 68,000 to about 21,000, 40,000 worth. Really? And you come down here, so 60 plus 40,000 equals 100, right? The charts tell things. It actually went over 100 for a little bit, but here's the thing I want to show you. And part of that was in October. Let's see here. I would say it started before October, so yeah. A lot of things with the election, but the biggest thing was Trump won, and then he said he's going to back Bitcoin and stuff I think the next day. So that's when it flew up high. And here's the other thing. It's dropped from 106 to currently today about 95. It's dropped, let's say 10% in the last few days, last week. I would be skeptical it's going to go higher, right? Because the saying is when things that go up must come down, right? Or you give back all the gains that you gave back there. So it might fall back down to about $70,000, okay? That's going to hurt a lot of people. But if history is right, it'll eventually come back up, work its way up, and it'll stall out here again and then fall, right? Because what happens is the people that bought all up here, right? If it comes down here, they're going to be at a loss. And some will sell, some will hold. When it comes back up, a lot of people that will look at their Bitcoin and say, hey, I can get out and break even, maybe make a few bucks or whatever, I'm going to sell on it then. And you'll have a massive wave of selling, which will cause capitulation, which will cause another downward fall. So that's my thoughts on Bitcoin. People say, hey, it's going to 100,000. It did. So good for them. Good for the early adopters. Currently, I'm still not convinced about Bitcoin that it's a viable currency. I know it's kind of like a meme stock right now, right? But I think this has everyone's attention, if that makes sense, right? And so I'm going to be paying a little more attention to it. I've always thought I'd pick some up once it falls back down, but I kind of missed my chance at around 20 grand, so I thought it'd go a little lower. So that's my fault, type thing. But I certainly don't want to pick up any right now. Let's put it this way. I'm not saying sell, but I'm saying it's not financial advice, but I'm saying if I own Bitcoin right now, I would have cashed out at probably about 100,000, give or take. And it would have gone up a few thousand more, and a lot of people would be kicking themselves in the pants. But those people that held on, saying, hey, it's going to go to 150,000, it's going to go to $1 million, and then it pulled back to like 94,000, and they bought around here, or they didn't sell, they didn't get their profits, they might be hurting or rubbing or hurting themselves or rubbing themselves wrong now. So let's move on to real estate. There's some stuff. This Resi Club is actually a pretty cool website. One of the things I want to bring you to is that 7 states that are back above pre-pandemic inventory levels. These 3 states are likely next. So higher inventory means prices will stay stagnant or go down, right? Because you have more to choose from, right? And that's if the buyers stay the same. If the buyers go up and there's more inventory, then it's going to stay stagnant or just kind of wobble there for a little bit. If the buyers go higher up than the available inventory, then what will happen is prices will still continue to go up. That's what you saw in kind of 2021, 2022. But if buyers stay the same or go down, and I will say this, not just buyers, not people that want a house, but qualified buyers, people who can actually buy, that have the money either through a loan approval or in cash, and that desire to buy a home, right? That is a qualified buyer. If the qualified buyers stay the same or go down, and inventory goes up, that means housing prices are set to go down, right? So let's take a real quick look at it. So here's, before the pandemic, 2019's this is active housing inventory of sale according to Realtor.com. So here are the months, right? You got the highs during the summers, and then kind of starts to go down. Like you see 2018, 2019, this is the normal kind of wavelength of real estate throughout the year, right? It starts to come up towards the summer, people sell, and then the listings go down towards the winter months, right? Especially in the north. Nobody wants to get out and look at a home as there's 5 feet of snow. The south it happens too, but probably not as to the same amount. But there are, and then you see the same trends kind of in the 2020 to 2023 category, right? A little bit kind of higher highs, a little bit, and lower lows, whatnot. But here's the higher highs, excuse me, and it's a little more wobbly. Like in 2020, it shot up, right? And this is housing inventory, by the way, right? If you're invested heavily in real estate, you want this inventory to go down and to stay down, right? So up here is around 1 million before the pandemic, right? And it's averaging probably around the 500,000 mark, depending on the pandemic. Here comes 2024 to the reverse rescue, right? It's just steadily going up, housing inventory, to the point to where it's breaking all of these cycles, right? It's not just this gradual kind of come up. It is just almost going straight up and to the right, which if you own a stock is great. If you own real estate and this is the inventory coming up, that's not good. That means the housing prices are going to go down. So now that we see inventory going up, and probably if we follow this line, it's going to go straight up. It may curve down, but that is still, even if it curves down to about here or here, that's still about 50% more than the previous years, right? So there's more housing coming on the market, more inventory. So let's go to purchases, right? Let's see if you can purchase the house, then you are a qualified buyer, right? You have the money either through a loan or cash, and you're going through it. If you look at the purchases, the blue is a purchase index. Basically, it's measuring how many, the amount of purchases per se, and the line is the interest rates, right? So back here during 2020, 2021, you had fixed rate mortgages at 2 and change, gosh, 2.7. Oh my, buy a house right there on January 4th. 2.65%, the low type thing, to now we've got rates around 7% or so. And the higher the rates, the lower the mortgage purchases, right? So the thing to follow is what is the correlation between how many people are buying versus the blue shade versus the orange line, right? So orange line low, lots of people are buying, right? Low interest rates, people are buying. That's during the pandemic, right? We come out when the Fed started raising rates, this blue shades goes down. Less people are buying. Again, it's qualified people that desire and that can afford it, either through a loan or they have cash in the bank. Okay, so we can already see that the amount of people are going down, and it's kind of a downtrend. It's kind of a up and down. But if you just make this into a line, it's on its way downward, right? In fact, the low was about 125, and we hit that around again, and now we're at just a little bit above it. So if things keep going, it's going to keep floating down, right? Well, let's go one more step. And this guy did a really good thing, a really good synopsis. I'll let you read it. You can just Google mortgage application rejections hit decade high. These are people that want to buy, that have trying to get a mortgage, and they have said no to. All right, and if you look at the Federal Reserve, this is for refinance. This is for an actual purchase of a new home. The big thing here is rejection rates among applicants is about 22% for new homes, about 22% or 22.6% for new homes, about 22% for refis, right? Average rejection rate for mortgage applicants increased by 8.6 percentage points to 20.7 in 2024, well above the 2019 rate of 10.2. So there's a lot of people that want to buy houses. Let's be honest. I want to buy all the houses. Every single one of them. I will buy all of them today if someone give me a loan for them all. The problem is we all have limits. Everybody wants to buy a house, but not everybody can. And there's a lot of people that are being pushed out of the market because they can't qualify for a loan. In other words, they want to buy, right? You do a survey of 100 people, everyone's going to say, hey, they want a home, or at least 90% of them will. But the this is saying that of that 90%, 20% of those people are going to be rejected by it, right? That's 1 in 5. That's 1 in 5 people for a new house purchase or a mortgage. That is insane. That is high. So it's not only that people want to, but that they're not being able to by the lending and stuff like that, right? So let's put some things together. Inventory is going up for real estate. People who are trying to qualify are getting rejected at a higher rate for real estate. So there's less buyers, right? Less able buyers. People who want and can get approved for real estate are buying less real estate, right? That equals less buyers. So again, we're going up high on the inventory. We're going low on the buyers. This means houses prices are going to go down, okay? That's just what the charts say. Now, what about rents? James, but I have my buy and holds. I'm just going to rent them, and eventually we'll just make sure this thing, everything will work itself out. Real estate always goes up. Always goes up. Always goes up. Bury my head in the sand, it always goes up. Now, I don't want to like piss a bunch of people off, which I probably just did, and get a bunch of like, hey, I'm not subscribing to this, but real estate will go up. The real question is, do you want to hold it through the painful time? And let's not be naive. It's going to be, painful times are painful times. They're not all roses and everything, right? People are going to miss their mortgages. People are going to do all these things. And so people are going to miss the rent payments. People are going to sit and they're going to squat in the houses. They're going to do everything they can because they are desperate. And if you've never had that happen to you, well, you haven't been in real estate long enough. It is not fun. I've been through several of them. But let's take a look at one of the other items. It's not cheaper to rent than to buy. Well, this is actually for housing prices. That's going to push them down, right? Renting is cheaper than buying in all 50 states. Right? How does your city compare? And you can go through this if you want, type thing. But and he goes through some of the bigger ones. I mean, especially like with Round Rock, or Austin. Okay, Austin's is flying. This real estate is flying down. If you haven't heard, right? It's one of the top 5 cities that is going bust right now in the real estate, and it's just the beginning. Okay, so renting is cheaper than buying. This will encourage people to rent more than buy, right? Especially the ones who aren't qualified, or just the ones that are a little frugal like myself and saying, hey, I'm not going to buy, like, I'll buy a house whenever I want to, right? When I can. If not, I'm just going to, let's see, I'm around, I'm just going to rent nicely, right? As opposed to buy and pay more. In fact, what if I just pop this up to like $2,200, right? Added a good 20% or more to my rent. I could get actually really nice. I could probably rent this house for for about that much, right? My point is, you can rent lavishly right now and still pay less than buying. So people are gonna rent, okay? And rents. Let's see here. All right, did a quick search on rent prices. Some of these are a little bit from the beginning of the year, but this one from Newsweek we'll go over is 5 days ago. So I'm just going to go through the headlines with you. Half of U.S. tenants can't afford to pay their rent, and here's what's ahead. Well, evictions, right? And investors losing money. I'll tell you that. You can look this article up if you'd like. Here's another one. Here's where the price of rent is dropping in the U.S. It goes through a little bit of a big term. Eagle eyes. So it says the South has seen a lot of new construction. This is true, especially, like, I'll tell you, in Texas, especially in the big cities, we are overbuilding. I'll tell you this right now. On average, or a good rule of thumb, it takes 5 jobs in a city, 5 new jobs in a city to cover 1 door on a multifamily house, or 1 door total, right? So if your city is adding 20,000 jobs, it can easily support 5,000 new doors, okay? If you look at the doors versus the jobs created, it's totally lopsided. I think Houston's got, gosh, I think it's got 20,000 doors coming in this year, or 40,000 or something like that, and it's only making about 1/3 of that in jobs. It's got it the opposite way, right? So I know for Houston, definitely rent prices are going down. But hey, here's a map of cities seeing the biggest drop in rent prices, right? This is in total. So Austin, Memphis, Nashville, Denver, San Francisco, those are some of the top ones, right? I'll let you look in this article, but rent prices are dropping. What we're seeing in this whole thing is that we had a ton of money threw it into. We were the baby in the bath, and mom or dad just put a bunch of water into it, right? And it just everything, all of our rubber duckies went up, all right? In the last 2 years, mom and dad has not been putting any water in. And in fact, they've been draining it a little bit, right? Slowly. And so the water levels are slowly going down, and we're just now noticing all of our duckies and other play toys are going down. That's the market type thing. And so the rubber duckies that went up the fastest, the easiest, those cities right now are seeing rents kind of get hit hard. Some are seeing rebounds, like New York has been in a rebound because during the pandemic, everybody lost everything, got out of there, right? So it is a bit specific to what city you're in, but for the average American city, rent prices are starting to stabilize or are on their way down. And the ones that are just stabilizing right now, most likely will be on their way down in the next 12 to 24 months. So we went over Bitcoin, went over oil, went over gas, we went over real estate. Tell me your thoughts on this. Hopefully this is helpful. Like and subscribe, send to a friend. I think that we're going to go through some really hard times. There's going to be some great opportunities in the next 12, 24 months. I think oil, at least where we're at in the, I probably wouldn't do any drilling right now, but for for mineral rights and such, I think oil is going to do just fine, right? The price of oil might go down. However, the drilling will go up. I've already been seeing that on the ground floor. Bitcoin, it depends on the market. I think my projections for Bitcoin is that it will probably get a very large pull down before it goes up anymore. But I could see Bitcoin, going like on this next leg, I could see it going to 200, 150, 200,000, right? I can see that. So yeah, real estate, I see the prices going down, and I see the rents going down. I see a lot of evictions in the future. And the biggest thing is this: I see the dollar flying up. And when the dollar flies up, it pushes everything down. So I don't want to give any financial advice, but it would be wise to look at your liabilities and start to limit them and to hold some cash. And if you have anything else, any questions, let me know. If you want some opportunities that I'm looking at working on, let me know, and I'll see you in the next video.